Welcome back to Investing Talk Podcast. Today, we are locking onto IREN. They're a fascinating player, kind of operating at the intersection of digital asset infrastructure and the booming AI cloud space. So the core question for today's analysis, the one on everyone's mind, is IREN a good time to buy now? Before we jump into that analysis, please do subscribe, like, and comment on this episode. And hey, if there's a specific company you want us to look into next time, please just leave a comment below.
Yeah, that's the perfect question to tackle because the stack of sources we've gone through, it really paints quite a vivid picture. We've looked at fundamental reports, detailed technical outlooks, and honestly, a pretty crowded calendar of near-term catalysts. And our reading is that the overall confidence points toward a strong bullish thesis. We'd rate it about an 8.5 out of 10. And that conviction isn't just based on one thing. It's really driven by the performance in its two main sectors. High-efficiency Bitcoin mining and their aggressive expansion into AI cloud services.
Okay, an 8.5, that's pretty strong. Let's unpack this then, and maybe start with the most obvious thing. The sheer speed of growth. When you look at the financials, especially that revenue trajectory, I mean, the numbers aren't just good, they look explosive. Can you walk us through the highlights there?
Absolutely. So when we dig into the financial results they reported, the real standout metric is that IREN delivered a pretty remarkable 255% year-over-year revenue surge in Q4 2025. I mean, that's a performance indicator that doesn't just meet expectations, it kind of blows them out of the water. It's significantly outpacing nearly all its peers in the mining and data center space.
Wow, 255% growth. That's massive, especially for a company that's already reaching a significant scale.
Exactly. And the scale is critical here. Their trailing 12-month revenues, they hit a serious number of $501.02 million, $500 million. But the real sign of maturity, maybe the turning point, is the net income, $86.94 million. This is the crucial evidence, that the company has really transitioned from that historically capital-intensive, often loss-making phase you see with rapid infrastructure build-outs into one of robust, established profitability.
Right, moving from potential to actual profit. And that stability, it shows up directly in the earnings per share, too, sitting comfortably at $0.99. This points to some strong operational leverage. But growth this fast, it usually eats up capital just as fast. What's the secret sauce here? What's allowing IREN to scale so efficiently while keeping that profitability? What's their competitive edge, their moat?
Yeah, the competitive edge, the thing that makes their success repeatable and defendable, it lies almost entirely in their operational structure. IREN uses a unique, vertically integrated approach across their main hubs in Australia and Canada.
Okay, let's define vertical integration for listeners in this context. What does it actually mean day to day when you're dealing with Bitcoin mining and AI cloud stuff?
Well, practically, it means they own the entire chain of production, basically from the ground up. They control the electrical infrastructure, they design and build their own data centers, and they handle procuring and managing the computing hardware itself. They aren't just like renting space and plugging in machines somewhere. Now, why this matters? Well, it's twofold. First, it creates these huge barriers to entry for potential competitors. Replicating that kind of capital-intensive infrastructure and, crucially, securing those power agreements, that's an enormous task. And second, maybe more importantly for investors, it provides IREN with superior operational flexibility and major cost advantages. They can manage power costs internally, optimize how they use power between mining and AI based on real-time electricity prices or compute demand. This is precisely how they turn that $500 million in revenue into stable net income, even when Bitcoin's price is, all over the place.
That makes a lot of sense. They've essentially de-risked their main cost input, power, which allows for more predictable cash flow. And just to ground us on the sheer size of the company we're talking about, this isn't some small startup. The sources mention a current market cap of $15.71 billion, backed by about 272 million shares outstanding. This is a large-scale operation.
It really is. And to understand the immediate runway, we kind of need to look at how this structural advantage let them execute that dual-engine strategy over the recent FY25 reporting period. This timeline really shows how they leveraged the Bitcoin stability to, fund the AI expansion.
Okay, let's dive into that timeline then. How did the last quarter sort of play out strategically for them?
Okay, starting in August, they reported those strong FY25 results we just discussed. Crucially, on the Bitcoin side, they showed real stability. An average operating hash rate of 44.0 exahashes per second. And just for context, an exahash is a quintillion hashes per second. It's a massive measure of computing power. That 44 EHs figure puts them right up there among the global leaders in efficient mining. They mined 668 BTC during that period, with hardware profits hitting $50.8 million. So that confirms the mining operation is a powerful self-funding engine for them.
A really solid foundation then. And then in September, we started to see the market react to that sustained performance, right?
Absolutely. The analyst community definitely took notice. Canaccord Genuity Group, for example, increased its target price pretty significantly, moving it from $37 up to $42, and they reiterated a clear buy rating. We also saw a key leadership change. They appointed Anthony Lewis as the new chief financial officer. That signals, a strategic focus shift towards maximizing financial efficiency and really navigating the complexities of scaling this whole integrated operation.
And then came October. This seems like the inflection point where the market really woke up to the fact that the AI engine wasn't just some side project. It was becoming a critical new growth driver.
Precisely. October was really defined by that AI expansion. IREN announced they signed new multi-year AI cloud contracts. Now, while the specific details like the clients or the total contract value weren't made public, the market's reaction was immediate and, frankly, quite pronounced. That deal-making activity was directly cited as the reason the stock hit a new all-time high that month.
Okay, I have to pause you there because this is maybe the vaguest part of the source material we have. Multi-year AI cloud contracts. What does that actually mean in terms of IREN's infrastructure? Are they just renting out server space, or is it something more involved, higher value?
Right, that's where we have to do a bit of analytical reading between the lines. Given the market's strong reaction and the capital intensity of their vertical setup, these are almost certainly high-value, high-performance computing, or HPC contracts. They're likely providing dedicated, high-density GPU capacity, the kind of heavy computational horsepower needed for training large language models, LLMs, or complex AI research. This stuff requires guaranteed uptime and massive reliable power access, which is exactly what their vertical integration is designed to deliver. So it shifts their revenue source, making it less solely dependent on the fluctuating price of Bitcoin and more towards securing these long-term, high-margin revenue streams from the, let's face it, insatiable demand for AI infrastructure.
Okay, that definitely strengthens the investment rationale quite a bit. So let's transition now from the operational success story to the technical outlook, the momentum that seems to be driving the investment thesis right now, especially as we head towards the end of the year.
Yeah, the momentum is definitely palpable. The stock, as of our analysis window, was trading at $57.07, and it showed a significant 13.1% gain just from the previous close. When you look at the 52-week range, which runs from a low of $5.13 all the way up to $50.19, you can see the stock is hovering right near its all-time high. Really strong performance.
And technically what really jumps out is the high beta, 4.20. For our listeners who maybe don't live and breathe technical charts every day, what does a beta of 4.2 actually mean in practical terms?
It basically signifies amplified exposure, amplified volatility. So if the broader market, let's say the S&P 500, moves up 1% on a good day, IREN is statistically expected to move up 4.2%. That makes it potentially a fantastic tool for compounding gains quickly in a sustained bull market. But, and this is crucial, the reverse is also true. On a day the market drops 1%, IREN is poised to drop 4.2%. It's high risk, high reward. Classic momentum trading territory.
Okay, given that risk profile and the stock being so close to its high, I have to play devil's advocate a bit. The company's revenue is up 255% year over year. Why are analysts only targeting a high of $82? That seems maybe a little constrained if the growth story is truly that explosive. What headwinds are they pricing in?
That's a fair challenge. The analyst reports seem to suggest two things are factoring into that $82 ceiling. One, there's still some residual skepticism about the long-term volatility of Bitcoin, which is, after all, still the baseline engine, right? And two, there's the immense capital expenditure required to keep scaling that AI infrastructure. It costs a lot to stay on the cutting edge. So they're projecting the growth, yes, but they're also factoring in the necessary investment to achieve it. However, despite that, the overall consensus is still overwhelmingly positive. We're seeing 5 strong buy and 2 buy ratings in the sources, no sells. And the technical indicators do suggest a bullish trading range, generally between $50 and $70 over the next 3 months or so. The ceiling, that high price target, does sit at that $82 mark you mentioned.
Okay, so to hit $82 or even break convincingly into that $70 range, we need some powerful catalysts. What's on the immediate horizon? What are the most critical short-term events, say, over the next 3 months that could trigger that kind of surge?
Well, the single biggest event, the one looming right around the corner, is the upcoming earnings report scheduled for November 25, 2025. Given their track record now delivering revenue surprises and the market's clear enthusiasm for those AI contracts, this report is really viewed as a major high-impacts opportunity. It could be the thing that breaks the stock decisively through current resistance levels and triggers that accelerated momentum towards the $70 plus range.
So November 25th is a big one internally. Beyond the company's own performance, what about market-driven catalysts? What else do we need to watch for that could influence such a volatile stock?
There are two main market-based events noted in the sources. First, around December 1st, we have the potential impact from ETF rebalancing. Now, this isn't just a date on the calendar. It matters because if IREN enters or potentially exits specific tech or crypto-adjacent indices tracked by major ETFs, those funds are often forced to buy or sell millions of shares pretty much immediately. That can create substantial volume and therefore volatility.
Okay, forced buying or selling. Got it. And the second one?
Second, heading into the new year, around January 10th, there's the institutional buys analysis. This basically refers to the release of regulatory filings like 13Fs that will show whether major institutional investors, the so-called smart money, significantly increased their positions after those AI contract announcements became public. A confirmation of large institutional conviction would definitely help solidify the long-term thesis and could provide strong support for the stock price.
Okay, so we have a pretty clear picture. High risk, high reward thesis built on unique infrastructure, this dual engine profitability from Bitcoin and AI, and some specific calendar triggers coming up. But we always need to provide a balanced view. What are the main risk factors that could potentially derail this 8.5 out of 10 thesis?
Absolutely. A balanced view is critical, especially with that 4.2 beta. The primary company-specific risks are, unsurprisingly, tied directly to their two core businesses. First, there's the inherent Bitcoin price volatility. That directly impacts mining profitability and their baseline cash flow. No getting around that. Second is the sheer capital-intensive nature of scaling operations. They constantly have to invest in the newest, most efficient hardware and infrastructure to stay ahead. That requires a lot of capital, which can drain available cash.
And how does management strategy, specifically that vertical integration, aim to mitigate those two big risks?
Right, it circles back to that core strategy again. Management really relies on controlling that cost structure, owning the power infrastructure, managing hardware procurement efficiently to lessen the blow from Bitcoin price swings. It gives them a buffer. And they use geographic diversification, being primarily in stable regulatory places like Australia and Canada, to counter the sector risks. Specifically, the risk of sudden regulatory changes affecting Bitcoin mining, which often plagues companies operating in maybe less predictable jurisdictions.
Okay, so putting it all together for you, the listener, if we tie this entire analysis together, the 255% growth, the AI expansion, that vertical moat, the $82 target, the risks, what's the final investment rationale that emerges from the source material?
Well, the synthesis suggests IREN is kind of uniquely attractive on two different time horizons. First, potentially for short-term momentum trading, trying to leverage that clear November 25th earnings catalyst to capture quick upside towards that $70 range, maybe beyond. And second, perhaps more compellingly for some, long-term wealth creation, capturing the structural growth that's seen as inherent in wider Bitcoin adoption, combined with the explosive recurring revenue demand coming from the AI cloud sector. That vertical integration provides the foundation for that latter part, giving the long-term story, significant credibility.
So to recap the core takeaway here, IREN's demonstrated ability to sort of seamlessly pivot, using its Bitcoin mining stability to fund high-margin AI cloud contracts, all underpinned by that powerful vertical infrastructure. It definitely makes it a compelling story right now. All eyes really have to be on that November 25 earnings report. That feels like the single most critical near-term hurdle to confirm this aggressive bullish outlook.
Exactly. And that leads me to maybe a final provocative thought for you, the listener, to mull over. Given that IREN's recent success is being pulled forward by both the volatile, price-driven Bitcoin market and the aggressive, capital-demanding expansion of AI infrastructure, how might an unexpected shift in how investors value those two things affect confidence in that $82 target? For instance, what if the market suddenly starts to value long-term AI stability far more than short-term crypto profits or vice versa? It raises a really important question about which engine ultimately will be seen by the market as the primary driver of future valuation stability for IREN. Which horse are investors really betting on?
That is the essential question to wrestle with as you build your own thesis around this stock. Thank you for walking us through the source material today and sharing your insights. We definitely encourage you to continue exploring the subject and refining your own investment perspective. We'll be back soon with more analysis.